Iraqi Dinar today. Latest news. Dinar. The financial landscape for the Iraqi dinar is on the verge of a monumental, structural change that moves far beyond mere speculation or the usual chatter that circulates in the foreign exchange community. For years, countless individuals worldwide have been holding onto their physical dinar notes, viewing them as a long-term investment tied to the eventual recovery and economic revitalization of Iraq. This entire narrative is being rewritten with a confirmed directive from the Central Bank of Iraq, signaling a definitive end to the current iteration of the national currency. This isn't a minor regulatory shift. It is a foundational overhaul that impacts the tangible asset sitting in your possession, making it crucial to understand the official process of transition now underway. The banknotes currently in circulation, the old dinar, carry with them a legacy deeply rooted in a turbulent period of Iraq's modern history, a time marked by international sanctions, conflict, and the incredibly difficult process of rebuilding a shattered financial and governmental infrastructure. For international collectors and those who made a bet on the country's potential, these notes became a physical representation of hope for future stability and economic strength in a resource-rich nation. They symbolize an era of volatility, but also the tenacious effort to transition away from a vulnerable financial system toward one that can be integrated into the global economy. Until this recent official confirmation, holding the legacy dinar was a passive endeavor, essentially a waiting game centered on the hope that national economic fundamentals would strengthen enough to support a significant valuation change. There was, however, always the lingering possibility, a risk frequently discussed, that the currency itself could be rendered obsolete or replaced before any perceived value could be realized. The Central Bank of Iraq's latest announcement has eliminated this ambiguity, transforming the speculative hold into a concrete logistical challenge for all current holders. This decisive action by the Central Bank of Iraq is a major piece of news that validates the long-standing belief among many that the pre-reform currency system was always intended to be temporary. Importantly, it also introduces a clear and present urgency for everyone currently holding these older notes. This is an all-encompassing reform of the country's monetary framework, far exceeding the scope of a simple policy tweak or an interest rate adjustment. The central bank has now formally indicated that the existing banknotes, the ones stored in vaults and drawers across the world, are scheduled to be systematically withdrawn from circulation. The purpose of this sweeping maneuver is to pave the way for a newly designed and structurally superior currency system. This confirmation fundamentally alters the context surrounding the dinar, shifting it from a prolonged period of passive observation to an active phase of transition. For asset protection, it becomes absolutely essential to thoroughly understand the precise mechanics and timeline of this currency reform, as laid out by the official issuing body. The first step toward securing the value of one's holdings begins with an appreciation of this imminent systemic change. To fully grasp the timing of this significant reform, one must consider the broader economic progress Iraq has made over the preceding years. This is not an abrupt decision. Rather, it represents the culmination of painstaking multi-year efforts aimed at achieving genuine economic stabilization. The nation has been diligently working to modernize its entire banking sector, significantly improve core infrastructure, and ensure its financial practices adhere to modern international compliance standards. These steps are designed to finally break free from the isolation that plagued the country's finances for decades. A combination of factors, including sustained, reliable oil revenues, a noticeable uptick in foreign investment interest, and targeted measures to combat systemic corruption, has collectively created a fiscal environment that is demonstrably more robust and secure than it has been in recent memory. Previously, The high degree of internal instability and insufficient governance made such a comprehensive and potentially disruptive currency reform far too risky to execute. The current Iraqi leadership, however, appears to possess the necessary confidence that the foundational economic stability is now firmly in place to successfully manage this intricate transition. The practical details of how this reform will be executed are of paramount interest to every individual holding the current older dinar notes. Based on official statements and insights, this process is designed to be a strictly managed, phased operation, avoiding any potential chaotic rush. The very first, and arguably the most crucial, phase involves the implementation of rigorous verification protocols for all existing paper currency. This step is non-negotiable and intended to safeguard the financial system against fraud. The central bank is acutely aware that a currency exchange of this immense magnitude serves as an immediate target for counterfeit operations and various forms of financial fraud. Consequently, before any value can be successfully transferred or notes officially exchanged for the new currency, every single banknote will likely be subjected to an intensive authentication process. The goal is to conclusively verify that the bill is a genuine, legitimate issuance of the Central Bank of Iraq. This means the physical condition and prudent storage of your notes are about to become the single most important factor in the security of your holdings. Once these essential verification protocols are established and the exchange process officially commences, the legacy notes will be methodically replaced by an entirely new series of banknotes. The design of these new notes is intended to visually represent a modern, forward-looking Iraq incorporating state-of-the-art security features. These features are specifically engineered to make the new currency highly resistant to forgery and ensure seamless compatibility with modern electronic banking and payment systems worldwide. This redesign goes far beyond mere cosmetic changes. It is fundamentally about enhancing utility and building international trust. The new currency's core purpose is to function smoothly within an increasingly interconnected global economy, a critical function that the older notes, with their historical association with past instability and lower security, struggled to achieve effectively. Parallel to the physical currency replacement, the entire financial infrastructure, including the interbank clearing systems and foreign exchange mechanisms, is undergoing a necessary and thorough modernization. This comprehensive modernization initiative is specifically designed to facilitate more efficient and secure international transfers and trade transactions, serving as an explicit signal to the global community that Iraq is ready for international business with a currency that deserves confidence and trust. For holders of the old dinar, particularly those residing outside of Iraq, this period of transition necessitates immediate, careful, and proactive logistical attention. The immediate first step is to undertake a dispassionate, objective assessment of the physical state of the banknotes you possess. Since a successful authentication process will act as the necessary gateway to the new currency system, notes that are significantly torn, heavily damaged, or in any way defaced could potentially be rejected during the exchange, thereby rendering them without monetary value. It is vitally important to ensure that all your physical holdings are maintained in the best possible condition, stored meticulously to prevent any further deterioration or damage before the exchange window opens. Simultaneously, all related documentation should be organized. In the current global financial environment, there is an intense and growing focus on anti-money laundering AML compliance and know your customer KYC regulations. Being able to readily provide comprehensive documentation, proving the legitimate source of your funds, and establishing the clear timeline of your currency acquisition could very well be a mandatory requirement during the official exchange process. This paperwork preparedness is just as critical as the physical condition of the notes themselves for international holders. There is also a significant unavoidable logistical reality that overseas holders must begin to strategically prepare for. When a nation institutes a major currency reform, the exchange process is almost always most easily and immediately accessible within its domestic borders. International channels for exchange typically open up more slowly, often with more stringent regulations and procedures. Therefore, you must remain intensely vigilant for official instructions detailing precisely how the exchange will be managed for those holding dinar abroad. Key logistical questions must be considered now. Will the central bank designate authorized correspondent banks in your specific country of residence? Will you be required to travel to Iraq in person to complete the transaction? Will there be officially announced strict deadlines or specific time windows after which the old notes will definitively cease to be honored as legal tender? These crucial questions cannot be ignored or left until the very last minute. Failure to meet a deadline or adhere to the precise procedural requirements set forth by the central bank could result in the total forfeiture of the asset's value. A major, natural question that inevitably arises in the face of this kind of reform is whether this change automatically guarantees a significantly higher value for the new currency compared to the old one. It is absolutely essential to approach this with a measured, factual, and grounded perspective, steering clear of any unrealistic hype. The reform provides modernization, structural soundness, and increased international credibility, but it does not instantaneously decree an explosion in currency valuation. The true value of any national currency is fundamentally a reflection of deep, underlying economic factors, including inflation rates, gross domestic product GDP growth, national trade balances, and overall political stability. While replacing the notes effectively removes old inefficiencies and dramatically improves confidence in the physical money, it cannot magically alter the global price of oil or eliminate all political challenges overnight. Holders should rationally view this as a necessary structural improvement that creates the potential for long-term growth, not as an immediate financial windfall upon exchange. Nevertheless, one should not dismiss the potentially powerful positive implications of this move for the long-term stability and health of the Iraqi economy. A modern, internationally recognized and highly secure currency is a powerful instrument for attracting substantial foreign direct investment (FDI). If the new dinar is successfully perceived by international markets as stable, reliable, and secure, it significantly lowers the overall risk profile for major international corporations considering business operations in Iraq. This anticipated influx of foreign business and capital will, over time, naturally strengthen the underlying demand for the currency, which is the genuine long-term driver of value appreciation. By decreasing the economy's reliance on the U.S. dollar for internal transactions and effectively curbing the black market volatility that was a persistent problem for the old system, the central bank is actively working to restore full sovereignty over its national monetary policy. If executed successfully, this creates a stable economic ecosystem where the new currency can appreciate naturally based purely on genuine economic merit. It is equally important to candidly discuss the inherent, unavoidable logistical risks that accompany such a massive national undertaking. The transition of an entire nation's monetary supply is a process fraught with potential pitfalls and challenges. Significant difficulties are involved in the complex process of printing, securely transporting, and widely distributing millions of new notes, all while simultaneously collecting, accounting for, and systematically destroying the old currency. Any mismanagement in this extensive supply chain could lead to temporary but severe currency shortages, trigger market panic, or cause widespread public confusion, all of which might momentarily destabilize public confidence in the process. Furthermore, if the general public, either domestically or internationally, perceives the exchange process as unfair, opaque, or overly burdensome, it could spark a temporary rush on the banks, or a brief crash in the street value of the old notes just before they are exchanged. Holders must be realistically prepared for a period of short-term volatility and market uncertainty as the financial system fundamentally adjusts to these new rules. For the international community closely observing this process, there are additional layers of complexity related to global compliance and associated costs. Global banking systems currently operate under extremely strict regulations regarding currency exchanges involving nations that were historically subject to sanctions or were previously labeled as high-risk jurisdictions. As a result, you may face substantial fees, less favorable exchange spreads, or intense regulatory scrutiny from your own local banking institutions when you eventually attempt to convert the new currency or exchange the old one. The process is highly unlikely to be as simple as walking into a local branch and exchanging a stack of cash. You must realistically factor in the potential ancillary costs of secure international shipping, travel expenses, insurance, and various potential legal or administrative fees that could significantly diminish any potential gains. This is precisely why having a crystal clear, well-researched plan and a thorough understanding of the specific regulatory environment in your country of residence is just as critical as diligently monitoring the official news releases originating from Baghdad. We must also issue a firm, necessary warning regarding the predictable and inevitable rise of scams and pervasive misinformation that always surface during news of this financial magnitude. Unscrupulous actors routinely exploit periods of transition to prey on the uninformed and the anxious. You may encounter unsolicited offers for VIP exchange groups, or individuals falsely claiming to have special, secret access to the central bank that allows them to exchange your notes at a higher rate or faster than the general public. These solicitations are almost universally sophisticated scams designed with the sole purpose of separating you from your money or your physical notes. The Central Bank of Iraq will operate exclusively through established, officially chartered, and regulated banking channels. There is no secret backdoor or preferential treatment for specific investors. Relying on unverified dealers or following rumors from anonymous internet sources is the quickest and most assured way to suffer a complete loss of your asset. Stick strictly to official, published guidelines. The practical timeline for fully executing this complex transition is another area where expectations must be carefully and realistically managed. While the central bank's announcement firmly confirms the plan, the actual, full-scale execution of such a comprehensive currency reform can realistically take many months or even several years to fully complete. The process involves intricate international negotiations, widespread software updates for global banking platforms, and a massive, necessary public education campaign within Iraq itself. Holders should not operate under the assumption that they will be able to exchange their notes within the next few weeks. This is likely to be a phased, gradual process, with specific timelines established for the exchange of different denominations or in different geographical regions. Patience will prove to be your greatest asset during this extended period. Reacting impulsively or emotionally to every minor public update or slight operational delay will only lead to emotional exhaustion and the high probability of poor, rushed decision-making. Looking at the domestic impact, this reform is primarily designed and positioned to significantly improve the daily financial lives of ordinary Iraqi citizens, which is the central bank's core mandate. A modernized currency facilitates dramatically easier and safer payment systems, significantly reduces the physical burden of carrying large, unwieldy bundles of cash for basic, everyday purchases, and actively integrates a larger segment of the population into the formal, transparent banking sector. This enhanced financial inclusion is absolutely crucial for sustained national economic development. When citizens have tangible trust in their national currency and their domestic banks, they are more likely to save, invest more, and circulate capital within the formal economy rather than hoarding foreign cash. This internal strengthening of the economic foundation is the bedrock upon which any future international appreciation of the dinar's value will ultimately be built. The international markets are far more likely to follow suit if the local population first demonstrates strong confidence in the new dinar. Transparency from both the Iraqi government and the central bank will be the singular variable that ultimately determines the long-term success or failure of this massive initiative. They must communicate clear, unambiguous, and timely guidelines regarding who is eligible to exchange notes, precisely where those exchanges can occur, and the exact duration the exchange window will remain open. Any major ambiguity will be instantly filled by damaging rumors and black market speculation, which could quickly derail the stability they are working so hard to achieve. As international observers and holders, we must closely monitor the consistency and clarity of their messaging. Are they adhering to their publicly announced dates and deadlines? Are the new notes being successfully and smoothly distributed without major operational issues? Are they actively addressing the specific logistical concerns of the Iraqi diaspora and international holders? These minute operational details are the real, factual indicators of whether the reform is proceeding according to the central bank's comprehensive plan. From a psychological standpoint, this confirmed announcement is incredibly charged for anyone who has maintained a long-term position in the dinar. It inevitably brings a complex mix of validation, renewed hope, and understandable anxiety. It is fundamentally crucial not to allow these strong emotions to dictate or drive your financial decisions. The intense fear of missing out FOMO might tempt you to impulsively acquire more notes without conducting necessary due diligence. Conversely, the fear of potential loss might tempt you to sell prematurely to predatory buyers offering cents on the dollar. The most effective antidote to emotional, panicked investing is a commitment to accurate, verifiable information and logical decision-making. You must ground your actions in the official releases and statements from the central bank. You must actively ignore the incessant, often contradictory hype and the doomsday rumors. Treat this entire process as a critical, high-stakes business transaction that requires a cool head, meticulous organization, and a steady, long-term hand to successfully navigate. Holders and long-term observers should also remain acutely aware that broader external geopolitical factors will continue to exert a massive influence on the ultimate outcome of this currency reform. Iraq operates within a geopolitically volatile region, and its national economy remains heavily and inextricably tethered to the global price of crude oil. A sudden, significant crash in oil prices or an unexpected, sharp flare-up of regional conflict could force the central bank to drastically alter its plans or could severely depress the value of the new currency, regardless of how flawlessly the reform itself is executed. Therefore, while the internal currency reform is an undeniably positive and necessary internal step, it cannot and does not insulate Iraq from the broader economic and political realities of the world. Monitoring major global economic trends and geopolitical developments is just as necessary for informed decision-making as monitoring the specific, local news emanating from Iraq. For those holding the older notes, your immediate to-do list should be intensely practical, defensive, and detail-oriented. Do not rush into any immediate, panic-driven decision to sell, but at the same time, do not blindly assume that the exchange process will be easy or automatic. You must immediately take a full, precise inventory of your holdings. Document serial numbers, categorize your notes meticulously by denomination, and note their current physical condition. If your notes are stored in a secure third-party facility, check on them to ensure they have not been compromised by humidity, pests, or other physical deterioration. If you have digital records of your initial purchase, ensure they are securely backed up in multiple locations. This meticulous, proactive preparation ensures that when the official green light is finally given for the exchange process, you are fully prepared to move immediately, possessing all the necessary proof and documentation to facilitate a smooth, verifiable, and successful transaction. This level of readiness is paramount to preserving the asset's value. Furthermore, you should immediately begin researching the specific banking laws and foreign currency holding regulations in your own country of residence. Some nations impose very strict, clear limits on the maximum amount of foreign currency that can be legally brought into the country or exchanged at any one time without automatically triggering alerts with regulatory agencies. Knowing these precise limits well in advance will allow you to structure your future exchange strategy, both legally and with maximum efficiency. It may also be a wise, protective measure to consult proactively with a qualified financial or legal professional who specializes in foreign exchange or international tax law to fully understand the potential tax implications of any eventual value gain. Being thoroughly prepared on the regulatory and tax front is just as important, and potentially more costly, than the physical handling and exchange of the banknotes themselves. Regulatory compliance is key. We must also seriously consider the high possibility of a dual currency period, during which both the old and the newly issued notes circulate simultaneously for a specific, predetermined duration. This is a very common, standard practice in major currency reforms, designed to allow the entire market to adjust gradually without any sudden shock or panic. During this crucial overlap, retailers and banks in Iraq would accept both currencies but would most likely only dispense the new currency in change. For international holders, this defined window is typically the most critical and opportune time to act decisively. Once the old notes are formally and officially demonetized, thereby stripped of their status as legal tender, they instantaneously become mere collectibles with absolutely no monetary value. Watching for the central bank's announcement of this specific final sunset date for the old notes is the single most important piece of actionable information you will need to track and act upon. Ultimately, this confirmed currency reform signifies Iraq's determined and necessary attempt to turn a major historical page and definitively close the difficult chapter of instability. For the nation itself, it represents a bold forward-looking move toward greater monetary sovereignty, normal economic function, and stability. For the long-term holder, it marks the complex culmination of a long period of speculation and the challenging beginning of a new logistical reality. The transition from a speculative holding to a realized, verifiable asset is rarely a simple, straight line. It is an inherently complex process filled with bureaucratic hurdles, market adjustments, and the need for intense personal organization. The often cited get-rich-quick narrative that has long surrounded this currency must now be consciously and deliberately replaced with a pragmatic, focused mindset of manage your asset wisely. The core opportunity has now decisively shifted from a strategy of accumulation to one of diligent preservation, careful planning, and efficient conversion. As we continue to meticulously monitor this developing situation, our firm commitment remains to bring you verifiable facts as they are officially released, systematically stripping away the rumors and focusing exclusively on the actionable intelligence you need to execute your plan. We will be maintaining a close watch on the central bank's press conferences, the relevant Parliamentary Finance Committee statements, and the authoritative reports from international financial bodies like the IMF and World Bank regarding Iraq's ongoing economic progress. These are the only sources that truly matter. In closing, This confirmed news of a comprehensive currency reform is a genuine watershed moment that validates the significant attention so many have paid to the Iraqi dinar over the years. However, this validation is not and should not be misinterpreted as a guarantee of immediate or easy profit. Instead, it is an undeniable requirement for significantly increased personal responsibility, meticulous organization, and unwavering vigilance. The days of simply buying notes and attempting to forget about them are over. Now is the time for active management, careful and considered planning, and staying precisely informed through reliable official channels.